How's it going, everybody? Welcome back to the channel. My name is Jay, and despite what some of you think, I have never starred in a major motion picture. But I am here today to talk to you about dividend stocks. More specifically, how to choose the best dividend stocks to invest in. And to do that, I'm going to give you the 5 things that I look at before deciding to invest in any dividend stock. The hardest part of investing in dividend stocks, or any stocks for that matter, is figuring out where to start in finding the stocks that you want to invest in. Just in the US stock market alone, there's over 3,000 publicly traded companies. Out of those 3,000 or so publicly traded companies, I'd wager that more than a third of them are dividend-paying stocks. That means you have over 1,000 different companies you could possibly invest in as a dividend investor. And of course, just because a stock pays a dividend, it doesn't mean that it's a stock that we want to invest in even as dividend investors. So how should we narrow down that list, and what metrics should we look at in order to find the best of the best dividend stocks to invest in? Here are the criteria I use and the reasons I use them. The number one thing I do to narrow down that list of possible dividend stocks as investments is look at the dividend growth history. I prefer companies that have been paying and growing their dividend for at least 10 consecutive years. And you can find a complete list of companies that have done just that on what's called the Dividend Achievers list. That's a list that's updated every year and includes all the companies that have paid and increased their dividend for 10 consecutive years. And the reason we want to look at companies that have a long history of paying and increasing their dividends is that having a long history of being a dividend-paying stock not only signals a commitment to that dividend strategy for the company, but also if that company is able to pay and increase its dividend year after year after year for 10, 15, 25 or more years, that's also a good indication that they have a strong and stable business model. So we can look at that Dividend Achievers list, which will give us companies of 10 years or more of consistent dividend increases. That will narrow down our world of stocks to possibly invest in down to about 300 companies. But obviously a longer history might be better. And if you're looking at companies with even a longer history than just 10 years of increasing dividends, you can look at the Dividend Aristocrats list, which will give you all the companies in the S&P 500 that have paid and increased their dividends for 25 or more consecutive years. Or if you want to look at just the cream of the crop, the companies with the longest history of consecutively paying and increasing their dividend, you can look at the Dividend Kings list, which includes only the companies that have been paying and increasing their dividend for 50 or more consecutive years. So you can look at any length of history that you feel comfortable with, but the number one thing I look at when narrowing down a dividend stock list to invest in is the dividend growth history. The second metric I look at when trying to find the best dividend paying stocks out there is the PE ratio. Now what the PE ratio is the price to earnings ratio. It basically compares a company's current stock price to its latest earnings. And I'll be the first one to tell you that the PE ratio is not a perfect metric by any means, but it is good at giving us a quick, rough estimate of how good of a value a stock might be at its current share price. Now, the exact PE ratio I look for varies by market conditions, but currently we're in a very hot stock market. Most everything is trading at or near its 52-week highs. I'm going to look for a PE ratio of somewhere in the 25 to 30 range or less if possible. And the reason for this is we want to find stocks at a good value. We might love Coca-Cola if it's trading at a PE of 12, but if Coke is trading at a PE of 45, it's probably overpriced and we're not going to get good value of our money, regardless of what the dividend may be. So for a rough estimate of what stocks may be a good value, PE ratio is the second metric I look at to evaluate a dividend stock. And the third number I'm going to look at to evaluate a dividend stock is the dividend payout ratio. And the payout ratio, as you may be able to guess, is a number that represents the percentage of a company's earnings that it's currently paying out in the form of its dividend. And what I generally look for is a payout ratio not greater than about 60%. Obviously, the lower number here is better. And the reason a lower dividend payout ratio is better than a high one is because a lower payout ratio signals that there is plenty of room for future dividend growth. While an exceptionally high dividend payout ratio, especially if it's over 100%, could signal that that company's dividend payment is unsustainable and a dividend cut is imminent in the future. One thing to note on dividend payout ratio though, is if you're looking at REITs, this metric becomes a little less useful. That's because due to the laws and regulations surrounding REITs and that business structure, REITs are required to pay out 90% of their taxable earnings as a dividend to its investors. So if you're looking at a company that is structured as a REIT, a real estate investment trust, just throw the dividend payout ratio out the window for the most part. Okay, so far we are looking at the dividend growth history of 10 or more years, a PE ratio of 25 to 30% or less, and a dividend payout ratio topping out at around 60%. So if you're finding all this useful so far, if you're enjoying the video, please hit the like button down below on this video. It's really the only way I know you're enjoying the content I'm making, and it helps spread my videos out to other people that might not otherwise see them. So I'd really appreciate that. Now on to our fourth metric that we're going to look for when we're evaluating the best dividend stocks we can find to invest in. And the fourth thing I look at is the dividend growth rate. Now this is where a lot of people will focus on dividend yield, but I prefer to focus on the dividend growth instead of the current yield. Now I like to see a dividend growth rate of at least 2 to 3% or higher if possible. The reason for this is that over the past decade or so, the inflation rate has been right around 2 to 3%. So if we can get our dividend growth to maintain or outpace inflation, that's only good for us as investors. Now, obviously a higher dividend growth rate is much better. And the reason I look at growth rate over yield is because companies such as Apple or Visa don't really pay a high current dividend yield, but they have very high dividend growth rates. And that means you're going to get a much higher yield on your investment with those companies that have a high dividend growth rate than you would more mature companies such as Johnson & Johnson or 3M, which are going to grow their dividends much more slowly year after year. Now, ideally in a portfolio, you have a good mix of both. If you only focus on dividend growth at the expense of current yield, you're not going to be making much money overall in the form of dividend payments. Now, the fifth thing I'll look at in order to choose the best dividend stocks I possibly can is I will look for consistent earnings growth. Earnings growth is important because that's what fuels not only future dividend payouts and increases, but earnings growth is also what's going to fuel the growth of the company and the share price growth that we'd also like to see in addition to our dividends. So what I'll do is I'll look at the past 5 or 10 years of earnings that a company has reported, and you'd like to see a nice upward trend in the earnings over that time. If you see a long trend of flat or decreasing earnings from a company, that could be a major signal that the company is stagnating and the dividend payout is in danger. The last thing we ever want as dividend investors is our dividends to get cut. So that's why the fifth thing I look at is a company's earnings growth. Now, it's important to note here that these metrics represent just a general set of criteria as a starting point to figure out what dividend stocks you could possibly buy. You shouldn't use any one of these metrics in isolation, and even with the 5 of these metrics all together, shouldn't be your only basis for buying a stock. How you want to use these 5 metrics is you want to use them to narrow down your list of potential investment candidates. Like I said at the top, we're starting with a list of thousands of companies, and then with each one of these metrics, we can narrow down that list to just a small choice handful of the best dividend paying stocks at the time. And the stocks we're left with after analyzing these 5 metrics, those are the stocks that are candidates for further research and analysis. And after we take that next step, that's when we actually decide which stocks we're going to invest in, which we're going to buy and add to our portfolio. If that sounds like way too much work for you, perhaps a dividend ETF is more your style. And if that sounds like you, you should check out this video right over here because I think it's exactly what you need. I hope you enjoy it, and I'll see you in the next one.